well, welcome everyone to this webinar on year-end tax prep for your small business. This webinar is being sponsored by the Maine Small Business Development Center, the SBDC, in partnership with Kitty Barbie, who owns Barbie Business Services here in Maine. My name is Christina Odliefson, and I'm a business advisor with the Maine SBDC, and I work primarily with businesses in Cumberland and York County, but I am happy to speak with anyone, and if you have questions after this webinar, you're very welcome to contact me at that information below. For those of you who might not know too much about us, the Maine Small Business Development Center is an organization that's here to really support the small business ecosystem in the state. And we do that by providing no-cost, confidential, technical and business advising services in Maine. And we do that for anyone at any stage of development. So if you just have a business idea and you want to talk to somebody to flesh that out, or maybe you are scaling up your business, or maybe you're even exiting your business and you need some advice with that process, we are here to help. And essentially, we are an organization that's the result of a partnership between the federal government, the SBA, the state of Maine, and here in Maine, we are also sponsored by the University of Southern Maine. And we also work with economic development institutions who host some of our advisors in northern and central Maine. And the topics that you see on the screen are topics that we talk to people about every single day, but we are happy to talk to you about anything related to your business. This organization's been around for almost 50 years, and it's in every state in the country. And that group of that motley crew on the left is our business advisors in Maine. There's 13 of us, and we are all people who owned businesses in Maine or still own businesses in Maine, have business degrees, or have just been working in the business world for a long time. We're a pretty approachable bunch, so you're very welcome to sign up for advising. That's the core of what we do is one-on-one conversations with business owners, but we also do webinars like this one. We have e-courses through our website, and we also have a really good newsletter that I would encourage you to sign up for because it gives you up-to-date information about things that might be impacting your business. What we are not are lawyers, accountants, and tax preparers, although Kitty Barbie, who's here with us today, is a certified tax preparer with the IRS. But the webinars we produce are for informational purposes. Once questions get too deep into legal, tax, or accounting questions, we typically refer you out. But we do have space in this webinar today to talk about some of your questions. And just some details here is that this webinar is recorded. It will be posted on our public YouTube channel, and you will receive the slides from this webinar in a follow-up email. And then again, please post questions in the chat. I'm going to be monitoring that as we go along, and we'll try to insert those questions in the moment. But if we don't get to it, we will have some time at the end. So I'm going to turn this over to Kitty Barbie for her to introduce herself and to present the webinar.
Good morning, everyone. I'm really happy to be here. And can everybody see my slideshow okay? Good, excellent.
Yeah.
Wednesday morning, 10 a.m., and it looks like we have a really good crowd of people who want to talk taxes. So either you are super organized and getting ready to prepare, or you're crazy, right? One or the other. All right. So, Tina, thank you for the introduction. I really appreciate being here, and I'm happy to talk to everybody about taxes and getting prepared, right? How to set your business up for success as we finalize 2025. And you might ask, who am I? Well, I am a certified tax preparer with the IRS. I have a separate business that does taxes. I also have a business that works with small business owners such as yourself that does accounting services. So my goal is always to help simplify this, tax speak, right? And to make it plain English so it's understandable for the layman, right? It's not your job to be the expert in taxes. That's my job, but it's my job to make it make sense to you and to take the fear and stress out of that situation. I've been doing QuickBooks for 15 plus years, desktop and online. Work with a lot of my clients are QuickBooks Online users and spend a good part of every week working with them. I also own 4 businesses of my own. So that means that I walk the same road you do. I have the same time constraint, the same challenges that you do. And there are times where I'm also sort of scrambling to get caught up with my reconciliations or to make sure that I'm ready. So trust me when I say I understand what you go through. As Tina said, we're happy to take questions as you have them. She'll stop me if somebody has a question that they want to ask. I'm happy to do that as you have that question. No stupid question, right? So please feel free to ask away. All right, so I think we have our first poll question coming up.
Absolutely. Let me launch that. All right, it is launched.
All right, so this first question is, how long have you been in business? Let's see what that looks like. All right, so it looks like for folks here, fairly evenly spread out, but about 38% of you have been in business for 5 or more years, everybody else less than that. So even for the experienced person, right, it's sometimes getting ready for taxes is this huge stressful time. So, and then obviously if you're first time going through it, it can be even more challenging. All right, and if we go right into our second question was, how do you feel about it? Um, let's see, we have one more response we're waiting for. Few of you really dread it, don't blame you. Many of you are just saying this is a task to check off. That's great, great. And then some of you are saying, yep, they haven't had time to even think about it. So good, thank you very much for that.
Absolutely.
All right. So it is now November 12th, is that right? And now's the time. Now's the time to get started. Now's the time. Hopefully the peak season for your business has sort of slowed down or you're in a steady state as we head towards the end of the year. So now is the time to sort of start looking at this and saying, what do I do to get ready, right? Number one, let's make sure you're organized. And that's making sure you have a system for all of your records, invoices and bills and expenses, bank statements, cash receipts, everything. You should at this point have a good system set up. It doesn't need to be super complicated, a very simple system. I still to this day use a very simple manila folder, one for each month of the year. And as I finish a month, all of the items for that month go in that folder. Once I've reconciled that month, the bank statement goes in there, some of my financial reports, and that month is then put away for the tax year. I should not have to go back unless I have questions on that folder again. Getting reconciled. Whether or not you use a bookkeeping system, it's really important that you reconcile your statements or your information to the bank statement. We call the bank statement the source document of everything that went in and out of your business. So you need to be able to match to that. That's what getting reconciled means, is making sure that you can validate all of your paper to what happened in the bank. Reviewing last year. All right, it's always good to pull out last year's return, take a quick look at it, maybe get some help understanding it, so that you can see, have I covered everything that was covered last year? And there may be things that have changed. For example, you may have bought a new asset, or you may have bought a home, or you may have had a child. Any of those can change your tax return. So you want to make sure that you have jotted down the changes and that you are having that conversation with your tax preparer. preparing W-9s and 1099s. These end up being typically fairly stressful for the small business owner, not because they're difficult to do, but because they're not ready to do them. When I hire, let me back up for a minute, a 1099 NEC is submitted for any independent contractor that we pay, and I'll talk about those rules a little bit later. But typically what happens is we don't have the information on the independent contractor. We hired someone to go mow the grass and we have no information, or we don't use this independent contractor a lot, and so we don't have their information to submit the 1099. A really good practice is for you to, before you pay them the first time, is to have them complete this W-9. A W-9 is simply a form that captures all of their information, their name, their address, either their social security number or their EIN number, and I always add an email address to that. That just makes sure that when you get ready to do 1099s, that you are not looking for that information. So that's something that you could be doing now in preparation for end of year. And then finally, book your accountant early. Schedule your tax professional before the rush. I'm getting calls every day now on the 2025 tax year. And Kitty, are you going to be able to fit us in? So it's important not only to schedule it, but that you have that relationship with that person. Okay, so I'm going to start with just the basics of how do I know what form I complete, all right? And I've made two columns here. The first column is if you're a sole proprietor doing business as or a single member LLC. And the second column is if you are either a partnership or an S Corp. So if you are a single member LLC, you are actually filing or filling out, or what is being filled out for you is a Schedule C. And that Schedule C is part of your 1040. So it's not a separate return for the business. You and the business are one and the same. And you would complete a Schedule C for each and every business that you have. If you're a partnership or you're an S Corp, it is a separate entity. So you are actually filing two returns. The first return is due March 15th, and it would either be a 1065 or an 1120S. You do not pay any money on that filing. They are due March 15th, but those returns spit out what is called a K1. And those K1s then are put into your 1040. So you have two returns to do. The first is March, the second is April. But the first one you do not pay any you do not pay anything on. Okay, just a few simple tax deadlines that we need to stay ahead of, right? January 31st is a big one. That's our deadlines for filing those NECs and your W-2s. And there are fairly heavy penalties every single week you do not file those on time. So we don't want to miss that deadline. And then, as I mentioned, March 15th, your S Corp and partnership returns are due. And then April 15th again, that's our Schedule C, our corporations, our personal returns are all due then. And I would be remiss if I didn't talk about quarterly estimated tax payments and when they are due. All right, if you have to make quarterly estimated tax payments, they are due April, June, September, and January. So the question might be, how do I know if I have to pay quarterly estimated tax payments? In general terms, here's what the IRS says. Once you owe them $1,000 or more, then they expect you to pay a quarterly estimated tax payment. Our tax system is called a pay-as-you-go system. That's so when you work for a company and you get a W-2, those taxes are taken out on a weekly basis or a bi-weekly basis, pay as you go. If you are a single member LLC, right, they're not. And so the IRS is saying you need to pay us quarterly what you owe us so that the whole year is not captured when you do the tax return. There are, in fact, penalties and interest that can be charged if you're not paying quarterly. Okay, to dig into the Schedule C just a little bit, again, it's used by sole proprietors, single member LLCs. It is part of your personal Form 1040. It's not a separate return. It is a schedule. It reports all the income and expenses from your business, and then it comes up with your net profit or loss, and that number then flows onto your, what I call the front page of the 1040. That number is then added with any other income you might have, such as investment income, or maybe you have a W-2 job on the side. Then all of that is captured. The calculation is done in order to come up with what your federal income tax is. Just some key
Hey,
points. Go ahead. Yes.
Kitty,
Yes.
I'm going to intersect a question here because I think it's one that comes up a lot in our advising as well. If someone started an LLC mid-year and they had been functioning as a sole proprietor, do they do two Schedule Cs or can they just do one?
You can still do one. You know, it's the same business, right?
Yeah.
It just has the legal entity behind it now. That's a great question.
And Lisa, just to expand a little bit, if you had changed to a partnership, and there was more people involved, then you would be doing a different tax return than your Schedule C. But if you're sole prop and then you were just a single member LLC, you don't need to do two.
And that brings up another, what thing I often tell my clients is, let's change the entity if we're going to change it at the beginning of the year. So we have a clean year. It gets really messy when I've got to figure out half year was a single member, the other half was a partnership. It just gets to be more work. So it's really good if you can plan that for the beginning of a year. Okay. I did want to mention about self-employment tax. So if you are self-employed, and I'm not talking about an S corp at this point, but you must pay self-employment tax on the profit the business made. That is Medicare Social Security tax. It is 15.3%. So it looks like you're being taxed twice, but it's not. It's step A, right? So if I make $10,000 and I've got to figure out what 15.3% is, that's the beginning of your tax. Then that same tax, $10,000, is put on the front of the 1040, added to other income to come up with your federal income tax. So you have self-employment tax and you have federal income tax. And the self-employment tax can be the biggest sticker shock that new business owners see the first time that they're like, oh my gosh, I've got to pay this amount on top of that amount. It's really, really good to be prepared for that. Okay. This chart is really just saying it doesn't matter what sort of bookkeeping system you have. It just says, where does this information come from, right? If you're using and most of it is the same information. If you're using a shoebox system, then you need all of your slips and your receipts and your bills and your bank statements. All right. If you're using a ledger, then you're totaling income and you're totaling expenses by category. And if you're using bookkeeping a system, you are printing out a profit and loss and balance sheet. But so my point here is it doesn't matter the system, you really are gathering the same information. Some of it is going to be more detailed. So for example, if you came to me and handed me the shoebox, I'm probably going to put it back at you and say, I'm sorry, I can't spend the time doing that. So that is not the recommended system to have. At the very least, you'd have some sort of paper ledger or a bookkeeping system. If you're running a business, the shoebox system is not going to be your friend. It's going to get you in more trouble than it's ever going to help you. So I would recommend growing out of that system pretty quickly if you're still there. Okay, the Schedule C itself. And again, if I don't know if you're doing your taxes yourself or if you have someone prepare them for you, but the Schedule C is called the profit or loss from a business. It's broke down into several sections. The first section is really about information about the business. When were you formed? What's your EIN number? What's your physical address? Okay. And it also does talk about, are you cash basis or accrual basis? And that's an important accounting term that you need to understand. You choose that the very first time you do your taxes for your business, and then you have to use that each and every time. That has more ramifications on your bookkeeping system than it does on the taxes, but it's important to know. And then we talk about the income, cost of goods sold, and gross profit. So all the money that came in, the revenue. And then part 2 is all your expenses broken out into very specific categories. Part 3 is sort of a breakdown of your cost of goods sold. Part 4 talks about if you are claiming expenses for a vehicle, it wants information about that. And then part 4 is really other expenses, things that are not listed on the Schedule C. Fairly straightforward, fairly easy to get through.
Kitty, I'm going to interject a couple of questions.
Yes.
One is whether you recommend that people do their own taxes when they're first starting out, or work with a tax preparer from the beginning.
Yeah, that's a good question. I did taxes for years and years and years doing TurboTax. When I stopped doing that was when I started working with businesses. And because it's important to make sure that you understand every one of the topics. And TurboTax is good about asking questions, but it might not be so good to not ask the question that you have. So once you hit business and maybe more than just a Schedule C, I would seriously think about going to a tax preparer. I think it's your comfort level. I know people who do their own using TurboTax for business, but once they started really dealing with investment income and more than one business, then they sort of stopped and said, okay, this is too much. I want to make sure that I am getting the best deductions, that I'm getting the best bottom line that I can for my tax situation.
We also have a question where someone has an LLC and then they have an additional revenue stream that's unrelated. It's from a roommate. Would that be considered a separate business?
It could very well be, and especially if you have expenses from that. There is a spot on the 1040 where you can list other income. So I think my answer is it depends on the situation. Are there
Okay.
expenses associated with that? Is it meant to be a revenue stream? Is it meant to be a business? Then that would sort of dictate my answer.
So Rebecca, that might be an opportunity to speak directly with a tax advisor on that one for you.
Yep. I had a client last year who ended up helping a family member take care of somebody who was ill, and they were paid for that. Well, somebody assured them that that was a non-taxable event, but in fact, it was a taxable event, and it had to get added to the front page of their 1040. Okay, so I wanted to talk about some of the special topics that are not necessarily the run of the mill, but they can certainly be advantageous for any business owner. First one is bonus depreciation. It first came into play with the 2022 Tax Cut and Job Act, and it was phased out. Well, now with the new One Big Beautiful Bill, it is permanently restored. And that is a great benefit for business owners. So basically what it means is if I go and buy a large piece of equipment that cost me $50,000 and had a 10-year life, I can depreciate it straight line method so much every year, $5,000 for each year of its life. That's the old classic depreciation. What bonus depreciation does, it is a tool for the business owner to say, wow, this year I had a lot of profit and I need to bring that down. So I can, in fact, depreciate that all at once, or maybe half of it this year and half of it next year, or choose how I want to depreciate that to benefit my situation. I'm often quite shocked that this situation happens and there's never a conversation with the tax preparer and the business owner on how they want to deal with that, because it is a huge benefit to small business owners. Grants, I get asked about these a lot, and are they a taxable event? They may or may not be. In general terms, a grant is taxable, and you would get a 1099 at year end if it is a taxable event. But read the language of that contract when you get it so that you understand that this is income that I can be taxed on at year end. In general, they cover operational expenses, and all of those expenses can be deducted on that return. Vehicle deductions. So the IRS generally says we have two methods for you being able to deduct vehicle expenses. One is the mileage, which is simply 70 cents a mile, 70 cents per mile for every mile you use for business. The other method is called the actual cost, which would mean repairs, maintenance, all of the costs associated with the vehicle. One over the other. Either method requires that you keep good records of your mileage, right? Who you went to see, what was the purpose of it, who was there, okay? Either method. The simplified is the mileage at 70 cents because it's a simple math versus you saying, okay, I had this much in repairs and oil and all of these items. And then what happens is there's a calculation done that says, okay, I had 50,000 miles, 20% was for business, 80% was for personal. Then there's that calculation done, or my actual cost, same thing. How much of this was business? How much was it personal? And so that calculation is done on that as well. There are some great apps out there that help you track mileage. I use one that's called Mile IQ. As long as it's in my vehicle with me, when I travel, it says, was this for business or personal? If it was personal, swipe left. If it was business, swipe right. At the end of the month, I print out the report, and then I go back and make my notes. This time I went to see this client, blah, blah, blah. So you have a good business record. One of the biggest red flags for the IRS for a small business is mileage. So you really need to make sure that you have very good records for that. Business travels, they can be deductible. Meals at 50%, entertainment not. But again, you need to keep really good records. I've actually had clients who received a desk audit from the IRS, and they wanted to see, I want to see the conference notes or the conference agenda that you attended. So they will ask for that level of detail. You can't just take a trip to Disney and say, yep, I was at a business conference. Home office deduction. There are, again, two methods. Think about the vehicles. You can use a simplified method or you can use an actual method. But here are the requirements. The space must be used regularly and exclusively for your business. You cannot use, okay, I do work at my kitchen table and say that's my office. That just won't wash with the IRS. For example, they get this strict. In my office, if I were to have a couch and a TV and was watching TV during my business day, they would say that is not exclusively for business, so we cannot deduct that expense. All right. The simplified method very simply says, what is your square foot of your office? And you get $5 per square foot up to a $1,500 deduction. You don't have to track anything else. The actual expense means you capture all the cost of your home expenses, and then you say, okay, my office is 20% of the entire footprint of my home, and they'll give you that 20% of that total amount. So again, really good record keeping is needed. It can mean a larger deduction, but it does require more work. I see this to be very advantageous if you're doing big repairs on your home. I just replaced all the windows, or I did this, right? That number is going to go up, and so your deduction is going to go up.
Hey, Kitty, we have a good question regarding mileage. Sasha is asking, she said, I don't have a personal business vehicle and I provide services on site in various areas. can I deduct the Lyft rides to and from those gigs?
Can you say that one more time?
I don't have a personal or business vehicle, and I provide services on site in various areas. Can I deduct the Lyft rides to and from those sites? So a rideshare expense.
So she's saying to get to this place where I provide my service, I need to take a whatever, Uber, taxi, whatever.
Yeah.
Absolutely. Absolutely. Yeah.
And and just to clarify, if you're working from your home, it has to be from your place of work to the site you're going to, correct?
Correct. And if your home is your place of work, then it's from your home to that site. If your business is, it has to be from the business to that site.
Okay. And I also have another question, just going back to depreciation for a second. Can you explain more detail if you don't choose straight line depreciation and you want to do some form of accelerated, then can you choose how much depreciation you're taking in each year, or is there a specific calculation?
No, you can choose. You can. I have worked with clients where I've given them 50% up front and then went to a straight line method after that. It is really a bonus for you to be able to figure out how you want to allocate that depreciation.
Okay. And then another question is, my core business is speaking and emceeing events. My client flies me to different cities to host their events. Does this mean I can deduct the Uber costs to get to the airport, to and from the airport, from my home to the airport, and the airport to the hotel?
Yes, that's all part of your travel if you're not already reimbursed for that from the client, right? I had a client who said, I'm going to charge you travel on their invoice to their client. They charge them travel, but then they try to deduct the mileage. You can't do both. So if your client is reimbursing you for all of that, right, you can't do that. But if they're not, then absolutely you can track that and put that under travel expenses.
Okay, so no double dipping.
No double dipping. A lot of people ask about year-end bonuses and holiday parties. Yes, they are absolutely deductions that you can claim. There are a few, I mean, they talk about reasonable expenses, right? They promote employee goodwill. They're not just for the owners and their spouses. They're not for contractors, vendors, or business contacts. All right. It cannot be super extravagant, but that is absolutely a deduction that you can claim. A lot of times I do have business owners who want to write a check for a bonus to an employee, and it's, IRS rules say it's got to go through payroll. They've got to pay their portion of the burden of that, unfortunately. All right, deductions and credits. So there is a difference, excuse me, and I thought it'd be worthwhile to go through them. A deduction reduces your taxable income. I made $10, I have $1 deduction, my net income is $9, okay? And that deduction, how much it actually saves you, depends on a whole bunch of other things, including your tax bracket. A credit reduces your tax bill dollar for dollar. So in this example, you owe $3,000, but you get $1,000 research credit, tax credit. Your bill is now $2,000. Two very different things, okay? A tax credit can be much more valuable than a deduction because it directly lowers the amount you pay. Does that make sense? There are a few tax credits out there, depending on your type of business. There's a research and development credit that you can get. I used that on one business this year and it saved them like $13,000. So it was well worth their time. There's some energy efficient credits. There's work opportunity tax credits, retirement plan startup credits, and disabled access credits. So these are all viable credits that you need to be looking at and saying, do I fit any of these? I will tell you, the research and development credit is very, very heavy on you documenting and being able to supply paperwork that absolutely matches up. So these are things you really have to pay attention to. Again, is the documentation that allows a credit. Okay, so as we talked about throughout this, right, getting your information together, don't claim anything you can't document. I would always err on the side of caution. I don't know why I have this Amazon for $900, but I can't prove that it's for business. I wouldn't claim it. Okay. There are a lot of items that are ordinary and necessary to run a business. I would use your Schedule C as sort of your source document. It doesn't mean those are the only things that you can claim, but that's a good starting point. Then make sure you're digging through and looking for those things that we don't often think about, rents and leases, right? Mortgage note. This time of year, and as we head towards the end of December, I say you're going to get a ton of documentation. Just put it in that folder called tax documents and let your tax preparer decide, yes, I can include that, or no, I can't. All right. And as we talked about, uh, vehicles, maintenance, meals, utilities, advertising, right? People don't think about some of these little things. A business card, yes, that's a deductible expense. The cost of hosting your website, yes, that's a deductible expense. Printing off flyers to get your name out, yes, that is a deductible expense. So really just overgather the information. Don't miss anything.
Kitty, we have a question.
Okay.
Could you just give some examples of what you would document for research and development? Or where maybe somebody would learn about those rules?
Yeah, it gets pretty complicated. I'm happy to send that information to Tina, and Tina, you can distribute it.
Sure,
Yeah, that might be the best way, because I do have a written document about it.
great.
Okay. So as we head towards the year end, when we are done with the third quarter, I typically like to sit with my clients and say, how are we looking? What does it look like that we're going to end out for the year? If you've got a big net profit and you say, I think this is pretty close after the fourth quarter, where I'm going to end, then it's strategy time, right? How am I going to, if I can, spend down this net income so in order to lower my tax obligation? So, things that I talk to clients about, is there equipment you can buy in December that you'll use in the next year, right? Look at your retirement plan. Take advantage of bonus depreciation, right? Look at your business structure. Once you hit a certain level of income, it might be time to thinking about becoming an S corp. There's a lot of advantages to that. So it's really time, third quarter to end of the fourth quarter, to really be strategizing with your tax preparer so that you have a plan in place for what's going to happen. And so that tax bill in March and April is not going to cause you to go into shock, right? You should have a good sense of where you're going to land anytime between now and December 31st.
Another question, Kitty. For travel, what kind of documentation would you need to use to prove that you were seeing a client in their home, especially when all their information is confidential?
Yep, yep. Again, I use that Mile IQ. It gives me a record that says I went from here to Bangor, and I've said it was business. So when I print that out, I then write, I actually do put, met with Tina, and we discussed how to onboard her as a client. I mean, it doesn't have to be a novel, but here's who was here. So I don't need to say we discussed her financial situation, just generally, why was I there? Every Friday I go to the Bar Harbor and I went there to take care of accounting for the company. It doesn't have to be that level of detail, but who was there and what were you doing there? Right?
Okay. Also another question, should we work with a tax preparer and tax planner separately, or can that be the same person? How much should I expect to spend on a tax planner / preparer? Does $500 an hour sound standard?
Oh, good God. I hope you're not paying $500 an hour. You just put me in shock. Yeah, that's a pretty loaded question. So as far as the two going hand in hand, it makes sense that they would be the same person. Could you do it separately? Sure. But your tax preparer did your taxes. If they're the right person, they can also help you throughout the year. Um, as far as how much you pay, I just maybe within the last month received it's done from a national association. It was a survey of how much people are paying for taxes, and it runs a gamut. I mean, it runs a gamut of you could pay $1,000 for a Schedule C all the way across the board. So it seems to be a wide open field at this point. Um, in fact, this year with my clients, I have had to separate tax planning from tax preparation. So it is two separate sort of roles. One is I do the taxes. The second is we check in year round, quarterly, look at financials, check your strategy. You have someone you can come to that says, hey, I'm thinking about doing this. Is there any benefit? Or, hey, I'm going to do this. How should I handle that tax wise? So definitely two separate things. The pricing is all across the board. Um, I don't know how to answer that without specifically knowing your situation, but I do think that pricing is going up and up because the field is narrowing how many people are doing it. I'm hearing things that I've never heard before. If I don't do your books, I won't do your taxes. I'm hearing that a lot now. Um, if you don't use QuickBooks, I won't do your taxes. I'm hearing that a lot now. I think the tax preparers a lot of them are aging out like everyone else. And I just think the field is getting a little bit chaotic. So I don't know if that was a helpful answer. I apologize.
I was just going to add to that that we often get people coming to us looking for help, and it's often too late in the season for tax preparers or accounting firms to take you on. As Kitty said, there's a shortage happening essentially. So you want to develop that relationship with someone after tax season and before tax season. So we typically advise after April 15th, if you're going to reach out to a new person, and before it gets too late in the fall, because they have a window where they will be happy to talk to you. After that, their heads are down and they're doing all this work.
And you make a good point, Tina. That window is shorter and shorter every year. I am almost doing taxes year round. I am now, our last deadline was October 15th. I'm now working with people who never bothered to file a tax for the last 3 years. So the window of how much free time we have, it's becoming a full-time year-round thing, more and more. And then regarding how much we can do, we send out our engagement letters December 1st. We give people a very limited amount of time to either sign up or not. And then, so it's January before we could say, yes, we can take you on, because not everybody, is staying with us. So it's really important, just like you want to be comfortable with your doctor, you want to find a tax preparer that you're comfortable with, that you can talk with, that you feel like, yep, they're helping me get my questions answered. Okay, business records. Make sure you are keeping your business and your personal separate. Your record should be maintained for a minimum of 3 years, and that's from the date when your tax return was filed. We often hear 7 years. 7 years is about employee records. Those need to be kept, payroll records need to be kept for 7 years. Digital backups. We should not only have a paper backup at this point, but we should have digital backups as well. You pull a receipt out after 3 months, forget 3 years, you can't read what's on it. So it's important that we are creating digital storage as well as paper storage. Clear notes. Make sure you know and can remember why you spent that money back in last February and what it was used for. All right. And that all sort of boils down to good record keeping, right? I did have a client who was audited from the IRS this year. It was a little bit surprising. She always pays, so it's not like she was getting huge refunds. But they said we do random desktop audits. So they roll some numbers and her name came up. And in the end, it all came up to this one item. I'm going to make up a number for $3,000. And she did not know what it was. She came back to Kitty. Kitty pulled out her records and said, yep, this is what it was for. I sent her the information I had, and the auditor said, great, thank you. So you always have to be prepared. All right, some of the common mistakes I find, accounts never reconciled before filing. So I might get the P&L from QuickBooks, and then when I dig, the books have never been reconciled. And if you do not reconcile, then the information is still getting dumped onto your financials, right? That's the whole point of reconcile, to making sure that what the bank says is actually what our records say. So that's a huge one. A lot of people missing their 1099s. I have situations where they get them, they're not quite sure what they are, and they just ignore them when they're giving them to me, or they actually deposited that money into a personal account. So make sure that every source of income, interest, all of it is being provided. Overlooking deductible expenses, right? We've talked about a lot of those. Misclassifying workers. This is an IRS thing. You're confusing an employee with a contractor, right? And the IRS will look at those numbers and then they'll dig and say, that person was really not a contractor. They were an employee instead. So you need to be really careful and really well versed around that topic. Estimated tax payments. If you're paying them, keep really good track. And I'm telling people, maybe you're still paying on 2023 taxes. I need to be able to distinguish that from what you paid for estimated taxes for 2024 or for 2025. You've got to keep a really good record of that. Guessing at mileage. This happens very often. All right. You got to have something that says on January 1st, I had 30,000 mile. On December 31st, I had 70,000. So there's 40,000. This much was business. This much was personal. This is the make and model of my car. You've got to be very, very good at keeping records of that. Whether you put a notebook in your car or you use an app, you've got to have good records. And the IRS actually says those records must be done contemporaneously, which basically means as they happen. You cannot go and create a mileage log at the end of the year. Waiting until the last minute. That's pretty much what this entire topic has been about, is right. Because waiting until the last minute is stress, errors, and missed deductions. And then ignoring contributions that you might be giving to your 401ks. And then finally, trying to do it beyond your comfort zone. Find a partner, get help. Just find someone who can help you navigate through some of these questions that always occur at tax time. Okay, we wanted to make sure we left plenty of time to ask questions. Again, ask, I'll answer the best I can. I'll follow up if there's something I can't respond to immediately, but it's there's no stupid question.
We had a question, Kitty, that I answered, but I'd love to know your opinion too. They're looking for what accounting system to use beyond Excel. And there's lots of them out there, and we're going to do some webinars on that, but would love your thoughts too.
Here's how I always start that conversation with: having these systems does not make you successful or not successful, right? It really depends on where you are in the stage of your business. I work with clients at the beginning stages, and for them, they might download from their bank all of their they might download all of their transactions and categorize them from there. So that's not really a system. It's a dump from your bank online, but it works for them because their business is new, they're fairly simple, and it makes sense to them. So they might do that. I have clients who use Excel, and if they're comfortable with it, that can be a fantastic tool to track everything. And there's pros and cons. Excel can be fantastic, but is it ready if you have to sit down with an investor? Is it ready if you're going to sit down with Tina or, Anne or Christine? People want to see information in acceptable format. So, but Excel is a fantastic tool. I make a large, um, I make a large part of my living teaching, coaching, and cleaning up QuickBooks Online. So am I predisposed to it? No, it's what I'm used to. We have a complicated relationship QuickBooks Online because a lot of changes are happening. I don't think they always serve the small business owner. Um, so yeah, so it, full disclosure, I make a good part of my living with QuickBooks Online. I know it, I understand it, I can help with it. But I think that they are so big that they're losing touch with who their audience is. There's software out there like Wave, which is free. I have several clients who have used that. It's a little harder for me to teach on it. Conceptually, I know accounting, but I don't only but I'm so used to QuickBooks. QuickBooks is the master. They are the largest one used for small businesses, not only in the US, but in the world. And so they have more bells and whistles, so they are more, better at doing new things. Um, so I recommend what fits for you at the stage of business you're in. I will also tell business owners, you're going to know when that spreadsheet is not going to work. You're going to know because you've gotten too busy, you need more efficiencies, you're finding errors, you're having to double check yourself again and again and again. So it's you intuitively will know, all right, I need to move to something that is going to be less full of errors and maybe less me manually entering things. That's really up to you. QuickBooks pricing has gone up, so there's a factor when you're a brand new business and you're looking at, oh gosh, on top of everything else, I've got to pay $75 a month just for the software. There are all these things that factor into that. And that's why I say I sympathize with the small business owner because I've walked the walk, and you sort of have to be able to juggle my budget with what I need. Is it still accurate? Is it doing everything I need it to do?
Kitty, we had a question that I want to make sure we got to. Someone asked if they can deduct their phone bill when they use it for business and personal. How does that work?
Yeah, that's a great question. Most people own a cell phone now, right? And the bill comes in. Well, here's what the IRS says is every month you're to take that bill and you're supposed to line item out. This was a business call, this was a personal call, this was a business, and you're supposed to do that math. I say that's not reasonable. So in general, what I tell my clients is 50%, 50% business, 50% personal. So that's the amount of the deduction. Either only put in 50% of it or only deduct 50%. I think that's a reasonable calculation that the IRS would fly with.
And that person followed up with a question that says, phone related, is that true for each state? Is there a difference in rules
I mean, the
by state?
IRS is federal, so, and the IRS rule says you line item out that bill. So that's the true rule. I try to say, what is the most reasonable thing to do? With knowing that here's the actual rule. Is anybody gonna do that? I don't know. I'm certainly not, and I prepare for the IRS taxes, so I try to say 50% is a good standard rule. It's all about risk, right? I'm going to do this. Here's what the rule says, and am I willing to take the risk? For me, I say that's reasonable.
All right. Are there any more questions? I was just going to follow up on this conversation and questions in the chat about using an accounting software program. And it's hard to say you should use one over the other. It really depends on the type of business that you have and what your needs are, because some people need a sophisticated invoicing system. Other people want it to easily integrate with a POS system. Some people are just like a consultant and they have maybe 10 clients a year and some basic office expenses, and a spreadsheet could work fine for them. So it really depends what your situation is. And then There is that free version of Wave that Kitty mentioned, and a lot of people don't want to pay for accounting software because, as Kitty mentioned, it is getting more and more expensive, and it's gone to a subscription-based model where you pay monthly to access a website, to access your books versus buying software, like we used to do old school and download it and then use it for years and years. So it's a tough question. uh, you want a system that's going to give you accurate information and be able to help with your tax reporting. And as Kitty mentioned, if you ever do try to apply for a bank loan or a grant, you do need to present formal financial statements, which are profit and loss statements and balance sheets and sometimes cash flow statements. So that is a lot easier to get out of an accounting software program. So it all depends on your situation. I would say both, I know Kitty experiences this, we as advisors experience this, that sometimes people buy software and then don't understand how to use it and actually get themselves into a worse situation. I guess the message is it depends on your situation, and also to get help. Don't assume that you understand what some of these accounts mean inside of an accounting software program, because I see a lot of mistakes and I see a lot of people not balance or not reconcile their books. And then I look at a balance sheet and I see tons of problems that tells me that there's mistakes all over the software. So really important to get some help early on. So that's my lecture.
That's a whole nother webinar on
That's a
accounting.
whole nother webinar. All right, so we are just about at time. If there's any further questions, please put them in to the chat now. But it looks like we're getting lots of thanks for your time, Kitty, and we are certainly here at the SBDC to help you. And feel free to reach out via our website, and we'd be happy to talk to you about all these different topics.
Thank you, everyone.
Yeah.